Hey, Christine Baldwin here, and welcome to Direct Sales Business 101. I'm here today to talk a little bit about the business side of direct sales and hopefully offer some advice for you in this video and in future videos that might help you with your direct sales or network marketing entrepreneurial endeavor. I personally have a lot of experience in the business world. I have a degree in accounting, and I also have a master's degree in accountancy, and I also have been part of entrepreneurial endeavors since birth, really. I grew up working in my dad's construction company, and then later on and currently still work at our family-owned business where we manufacture and sell hardwood finished supplies. Anyways, just so I wanted to let you know that I have a legitimate business background and wanted to share some of my techniques and maybe suggestions that I have learned over the years with you so that maybe you can use those in your businesses. One thing we need to remember is that direct sales are legitimate businesses. You'll run into people that aren't believers. They'll say it's a pyramid scheme. They'll say it's this. They'll say it's that. But truly, you are an entrepreneur, and I applaud you in your decision to start your own business and go down this path. Anyways, so today's subject is a fun one that we all love to talk about, and it's taxes. Well, unfortunately, the saying is true, death and taxes. And obviously this video is going to relate directly to the United States because I know the tax system of the United States, and hopefully help you through some struggles that a lot of first-time business owners go through that aren't really necessary to go through, and get you to the point where you understand a few things about our tax system so that you don't get into any trouble. So I want you to think back and remember that first time when you got your first paycheck. You were working $8 an hour and you worked, say, 10 hours that week. So you get your check and it's $80, right? No. You look at that check and it's only like $68, $70, and you think, what? They took my money. And then there's these little codes on there like FICA, or it might say FICA or Social Security, or it might just say SS or Medicare, or it might say federal withholding, or in my case, Montana withholding. And where'd that money go? Well, that's the business side of it. Everybody has to pay taxes, and when you work for somebody else, the accountant or payroll clerk or whoever is doing those payroll checks takes care of that for you, and the business owner pays a portion of the business taxes for you, which is the FICA or Social Security and Medicare. So that business is actually paying and remitting those taxes to the government for you. Now with withholding and withholding taxes, that they're just taking the money from your check and then remitting it to the government. So fast forward, and now you're in direct sales and you get your first commission check, and wow, it's $80, and you get to keep the whole thing, right? No, wrong. In fact, you get to keep less of it than you did when you were working for somebody else. But don't let that sway you, because the job of an entrepreneur is much more rewarding, and overall you can accomplish so much more than you can as an employee. So anyways, you get that $80, and you still need to set aside that money, but you have to do it yourself. Your employer's not going to do it for you. So here today we're going to talk about what you can do and a few suggestions I have to make that easier and make it a habit from the beginning. So what I'm going to suggest to you is, before you do anything with your business, regardless if you've already signed up or you're planning on signing up or joining and starting your own business, the first thing I need you to do, and I really suggest you do, is call a tax advisor. You're going to want to find somebody that's reputable and has the accessible office and knowledge of your state and your the taxes that will be due from you. So you're going to really want to look around, be picky, and you might have to pay a little bit more to get one that really fits for you. But it is worth the extra money. You can probably find a good advisor of sorts or a bookkeeper for probably $60 to $120 an hour, depending. And I know that sounds steep, but it's worth it to pay to get it done right. So the first thing you're going to do is find an advisor and make an appointment. And I suggest making the appointment for about 4 weeks out, maybe 3 to 4 weeks out. And just so you can kind of get your foot in the door and some experience on the way. And what you don't know is you just set your first goal, your first sales goal. So your first sales goal is going to be to try to pay for that first meeting with your accountant only with your commissions, so it doesn't come out of any household expenses other than your commission sales. So keep that in the back of your mind. It's a great goal to start with. But don't forget, you also have to earn a little bit more than that in commissions because you have to pay taxes. So what do I mean by that? So the first thing that you're going to do after you make an appointment with a tax advisor is I really highly suggest setting up an online savings account or a savings account at a different bank, or even just a different savings account at your regular bank. But I really suggest that you get it as a separate account so that it's not as easily accessible. And the reason behind this is that when you do pay your taxes, you want to make sure it stays there and you aren't robbing that money on a daily basis to get groceries or to buy that new shirt or whatever. So anyways, I'm going to set up that separate account, and then you're going to go out and work your business. Work it like there's no tomorrow. You can do it. You can do amazing things in this field. You can totally conquer the world. If you have the belief that you can do so. So get out there, network, and earn those commissions. And so then when you get your first commission payment, whether it's on a daily basis or weekly basis and bi-monthly basis or a monthly basis, what you want to do is take 1/3 approximately of that and put it into that online savings account or the account at a different bank or whatnot. And the reason you're going to do that is that should be enough to cover your taxes, including withholding and your self-employment taxes. So you want to make sure you do that every single time. You make $100, you put between $30 and $35 away. And I really suggest doing it to an inaccessible account. That way you're not constantly trying to rob it, like I said before. So what you're going to do is, if you make $100, you put away $30. If you make $1,000, you put away $300. And then make sure you keep track of what you've put away, and when you get to that tax professional appointment, you can show them what you've put away, and then they can make a better recommendation based on your personal financial situation on what percentage you should use. But hear me out here. It's easy to rob that money. It's easy to say, I need the groceries. It's easy to say, I need these business supplies. It's easy to not pay that money. And most of the time when it's a $100 commission check, people can make up the $30 pretty quickly. But what happens is over time, you'll get $100 commissions here, $100 commissions there, $100 commissions there, and pretty soon it's added up and it's $1,000, and you don't have the ability to put $300 away when it comes tax time. And what you're going to be doing is you're going to be having to make quarterly payments to your tax agencies. And so when you get to that point and you have to come up with that $300, or you get to the end of the year and you get your taxes done and they say you owe $300 or $3,000 plus penalties and interest, you're not going to know how to get that money back. So I really suggest, if you can do one thing for your business to start off with, it is to take 30% of your commission income and put it away. And then obviously adjust that rate based on what your accountant tells you. You may be able to do a little more or a little less depending on what your personal financial situation is, if you have other income earners in the house or anything like that. But please, take the time, do it right, because I promise you this, you'll be ahead of most entrepreneurs out there, because most entrepreneurs do not understand that they have to pay additional taxes that regularly an employer would pay. And secondly, then they get hit with lots of interest, lots of penalties, and at the same time have to come up with a huge chunk of money at once, when it's easier to sock that money away $10 at a time. So if you take anything away from this, just try to get into the habit of paying your taxes, or at least setting aside into a savings account first, and that savings account is not accessible, so that you're not continually robbing money from it. And when it comes tax time, you will say thank you. Anyways, hope everybody has a wonderful evening and got something out of this video. Please let me know if you have any questions. I'm not going to give personal tax advice. That's for your tax accountant. But I do want to wish you success in your business endeavor, and good luck, and thanks for listening to today. Be sure to watch for more videos in the future. Thanks.